Hey, I wanted to talk to you today about mortgage interest rates and why now is the time to buy. Morad Fiki is a great friend, and so I told him I would make a video for all of his clients and partners just to explain a little bit about where the mortgage markets are at. So if you're looking to buy, call my buddy. He's going to take great care of you. I'm going to talk to you about rates and why you've got to get in his car now and go find a great home. What most people are realizing is over the last 40 days, rates have gone up a full percent, which is absolutely crazy because this time last month, maybe a few days into November, you literally were at 3.5%, and now we're looking at 4.5%, and in some cases pushing 4.6, 4.7, which is shocking to most people. So let me show you a little bit about what's going on in the mortgage market. This is called it's a candlestick chart. It's mortgages are traded every day, just like stocks are, and they go up and down. And so as a mortgage expert, I watch this chart all the time to get a gauge as to where mortgage rates are going. And so one of the biggest objections we hear is, hey, I'm gonna just wait till rates go down. And what I wanna advise you as a professional, 15 years in the business, helping thousands of homeowners, rates are not going down, they're gonna continue to go up. And where we think 4.5 is now a high rate, in a year from now, you're going to think it was a low rate because I expect they'll be in the mid-5s and maybe touching 6%. So the reason why, and let me just show you this real quick, but the reason why most people don't even realize this, but since the 1910s, the 1920s, over the last 100 years, there's only a couple of times rates were under 6%. Here's one of them, and here's the other one. So what people don't realize is rates had gotten all the way up to 16%, and I know it's almost mind-blowing, but in the last 100 years, there's only two windows under 6%. So a 6% is a normal rate, and what you'll notice is people have gotten spoiled since 2007, where it literally broke through, touching the lowest we had ever seen mortgage interest rates go. So that's where this chart comes into play. So back in 15, rates were in the high 3s. We had just come out of being in the 4% range, 4.25. So rates started getting better, and as rates got better, when this thing goes up, rates are getting better. When this thing goes down, rates are getting worse. Also, for my visual people, green's good, red's bad. So what's happening is in 2016, you'll notice that rates got better, which means they were in the 3.8, 3.7, 3.6. Then they got a little bit worse, and you can tell this is over months. So it got better, worse, and then it started to trend up to where we hit the single best day we've ever had, which was 30-year fixed rate loans at 3.125, 3.25. And you'll notice it was only one day. Then the market said, no, there's no way that's sustainable. So the market pulled back and literally traded sideways until the election day. So when the election came, like him or love him, dislike him, it doesn't matter, the markets felt confident, and you'll notice that in stocks started to go higher, get better. Well, what people don't realize is when stocks get better, your mortgage interest rates have to go up to compete for the same dollars because they're both investments. So what happened was the day after the election, look at the single biggest day of loss. One day, day number 2 after the election, day number 3. So those represent about a 0.25% rate, 0.25% rate, 0.25% rate, and it tried to recover, and it's a sideways escalator where it's literally got worse, tried to recover, worse, tried to recover, even tried to gain some ground back, but guess what? It was pushed down, which means rates went up. Then this was only 1, 2, 3, 4, 5, 6 days ago. Look at this huge drop where the rates went up again, rates got worse, they tried to recover. And this thing, we expect it to continue to trend where it'll go sideways, get worse. So if we're at 4.5, by the end of the year, which is next week, we could probably be at 4.6, 4.7, literally rolling into next year. So my encouragement is this: even if you've got to break a lease a few months early, spend $2,000, it's worth it, because what people don't realize is $300,000 loan amount, full percent in interest rate means that you're going to pay $200 more per month. So that equates to $2,400 a year, or over $10,000 just in your first 5 years of having that mortgage. So if you're going to buy now. Call Morad. He's going to take great care of you. His phone number is the 832-610 4290. So again, call Morad. He's going to take great care of you. 832-610-4290. Hey, and if I can help you, my name is Steve. My number is 281-701-4521. That's my cell phone. Or go see steve.info. We'd love to help you build your mortgage plan. With that, Merry Christmas, Happy Holidays. Enjoy your family.